Hello everyone. If you have been watching the commodity markets for some time now, you would know that the general scenario has been unpredictable. Today, I, Anuj Chaudhary, would like to guide you through what's happening and what lies ahead. Let's start with the most important commodity right now, that is crude oil. The markets have been very choppy since President Trump's announcement to postpone military strikes on Iran. While many Iranian officials deny that negotiations are taking place, Trump has effectively doubled down on the claim. Markets are left striking a balance between welcoming the tentative news of possible de-escalation while weighing the immense uncertainty still clouding the conflict. A sharp relief rally was seen following Trump's announcement, driven by eased geopolitical tensions and falling oil prices. US equities rallied by 1.4%, while Asian markets also reacted positively. The US 2-year and 10-year treasuries dropped 5 basis points and 3 basis points to 3.85 and 4.35% respectively. In the medium to long term, Asian economies are expected to bear the brunt of the impact of this war in the next several months. Elevated crude oil and LNG prices are driving a renewed shift towards coal, supporting coal demand. The Russian oil port of Primorsk, a key facility for nation's export of crude oil and fuels, suspended tanker loadings after an overnight drone strike caused a fire. Primorsk is a vital cog in Russia's oil industry, exporting well over 1 million barrels of crude oil and diesel every day. However, we expect crude oil prices to remain volatile on incoming statements from US and Iran leaders and developments in the Middle East. Any fresh escalation may lead to fresh upside in energy prices. Technically, crude oil continues to remain bullish. Despite a sharp fall, it has taken strong support at the 20-day moving average. The momentum indicators have also shown some strength as the RSI has again started to rise. We expect crude oil to trade in the range of $80 to $105 in the near term. Let's now see what's happening with the precious metals. Gold and silver prices bounced back sharply after hitting their lowest levels since November 2025, basis a softening US dollar and easing US Treasury yields. However, near-term outlook remains weak amid reduced demand for gold as money moves to higher yielding assets. Markets will look out for fresh triggers for any major pullback. We anticipate a potential decline towards $4,000 to $3,800 in the near term. Technically, gold has declined sharply over the past few sessions and hit the 200-day EMA. It found support at the moving average and witnessed short coverings. However, it failed to hold on to the gains and have resumed the downward journey. The RSI is also showing weakness but is highly oversold. We may see gold trading in the range of $3,800 to $4,800. To conclude, in the near term, markets will continue to be vulnerable to Middle East geopolitical developments. We hope that you found this concise summary of commodities market valuable and informative. In a market this choppy, the hardest task is separating geopolitical noise from actionable data. The Mirae Asset Sharekhan Research Center provides that clarity, offering deep dive technical and fundamental analysis at research.sharekhan.com. Whether it's crude technicals or gold's oversold levels, get the research you need to act with precision, not emotion. Thank you for watching.
Investment in securities market